Hi, David here with Futures Trading. Want to go ahead and wrap up the YM before the afternoon gets too far gone. This is what it looked like in this morning's alert. So when I put it on YouTube here and Twitter, I actually put it on Twitter first. It was at like 5:07 this morning. I put it on Twitter and then I managed to put it on YouTube. I just posted it here for the update because I wanted to go ahead and get on with the rest of the day. But if you want to go back, I'll have a link below if you want to go back and watch what the before analysis was. It's pretty much right in front of you. I said, if we can close above here, it'd be ideal for today, but they may rotate back down here. It's very likely. No close above here would help. Okay, that would help. So now let's take a look at this information, kind of side by side here. All right, you can see the chart. This was for when Twitter, and when I put it on Twitter, and this is for the YouTube alert this morning. So when you start the video from before, you'll see the price was right there. All right, so now that was at 5:07. I framed out your whole day. All right, now notice that I did not put any kind of zones above this green line, and you can go back in the video and you'll see that I didn't put any up there because I kind of knew that it was a chance they may not get that far. Given if they would rotate down. And that's why I said this was very likely. It kind of goes together. Hey, if this is likely, they may not get up there. I said it would help, but I kind of knew it wouldn't. It probably wouldn't work. So now the information that I'm factoring in when it comes to this price level, I can't make available to the public. I can't. But I hope that you're using the ranges and the static levels. Okay, so I did this on the NQ. I told them the other day, 941. It came down like 950, turned around, and it went right back up. And I mean, it came down very volatile and literally climbed the rest of the day. And so the price levels that I released to the public, they're just as efficient. You can look at it and tell for yourself. If we started here, and if you're not familiar with the static levels or the range, I'll have the links below to kind of give you, of course, a chance to familiarize yourself with that content. But they're efficient as well. But when I put out this price level, whenever I do it, it's occasional. I will do it. Whenever I put that out, I'm trying to give you the best chance of, hey, if your day is going to end this way, this is what you're going to pretty much see. And so hopefully you can factor in your ranges and your static levels, and kind of navigate it the best you can. So they ran up, of course, wherever it's stated no violation, resistance, or support. That's them hitting that static level and not violating it, not going beyond or where they should. Because again, if they go one tick outside the zone, it's no bet they'll probably go to the next one. And that's all it is. It's just like here. They go one tick outside. They did drop back. And again, this is dynamic. You're supposed to flip the zone upside down. That's something I said in this morning's video. You're supposed to flip it upside down and then reference the stop accordingly. And you can get to know what those price levels are. I'm not going to go into that, but just for the sake of making sure, if you look at that video, you can compare the two. I didn't want to move the zones at all, so I left these where they're at. So the fluctuations that you're seeing, is just based on where the zones were at this morning. Now the ones that are hitting directly, I did state no violation, support, and resistance, so you'll know that was the appropriate reaction. So as it approaches the price level, it's supposed to be the sell, and then of course if they turn around, there's uh there's levels that's supposed to be beneath it, and you got to gauge the price patterns as they move, kind of give yourself a chance to see what would take place if they move down. So this is what it is. You can kind of see all the cyclical turns here. Pretty much caught quite a bit of them. Quite a bit of them. This was the only one that I thought was just a little too far out to really count it as the buy side. But it worked. It's just it didn't meet the criteria that I wanted to show you. And so now let's take a look at it on the price action chart here. That's just a trend chart. You can kind of see the zones from that. But the price action chart here, these are the price levels. If you're not familiar, again, with the levels and the static levels, you these are the prices, but the stop placement, you got to click on the video to learn that. I don't want to go into that. Wherever there's a bubble, okay, wherever there's a bubble, that's saying that it came within probably about 2 to 3 ticks of the static level and then turned. And in some cases with these static levels, they actually tagged the back of it to the tick. I believe it was this one. Let's check the low 95. So they tagged that zone to the absolute tick, and then they turned. I don't know if this one was one. No, that was 81. Okay, so they came really close, definitely on this one. It's another one in here. I just can't recall, but it's another one located somewhere in here. I don't want to dig through the chart and take up all your time. I did put the rejected twice indicator in here so you can kind of see where the R's, the REMs, the RSs are landing. And if you know that method, you can definitely look at the chart and say, hey, yeah, that probably would work, or no, that one wouldn't have worked. So it's not, of course, nothing's 100%. And so you just got to kind of blend all the information together. They may be racing down to that price level right now to try to close by the end of the day. Um, so before the London was finished, you had the London set right here, but before it was finished, if you look off the turn, you can kind of see, my blue bars, well, my green bars with the blue outline, they pulling into them. And of course, the green ones are just as effective too. You can kind of see they pull down into that green one there, popped up. And then you had the no close price pattern, right here with the no touch mid, that's something that I released to the public, and that's in the section two, and all that'll be down below. You can take a look at that. No close back above this bar. You can see they pulled up to it, and then they ran through the bottom of the range. And again, you can, just look at all of that. Before 9:30 came, 9:30 was over here somewhere. 9:30 right there. You had the blue bars coming in off this bottom, leaned over, touched the blue bar, pushed up, leaned over, touched the blue bar, pushed up, leaned back down, couldn't quite get all the way back down there. And then they turned around with the blue bar, and they're back up, kind of dove down into the blue bar here, and then pushed higher into that high. Turned around at 9:30, and again, my red bars, even though they don't, or red or green bars, don't have the outline, they'll still respond. And so they couldn't get back past that big red bar there. And then of course over here on this side of it, there's the blue bar with the red outline. They pulled up into it, just couldn't get it to work, and they drove themselves down. And so there's the push down with the blue outline bar pushed up. Here's the turnaround red bar, pulled into it. Some more red bars, and they're running to the downside here. So if you're not, again, familiar with the content, I will be sure to leave the links below. Do familiarize yourself with the information. If you want to look at the market structure video, that'll be below too, and that deals with the two leg removal. Okay, so you have an uptrend. Clearly, it's trending up. You got 6 bars there. We're not digging so far in the back, even though if you want to look, we can look back there. They're trending up. They're trending up. Two leg removal. We can kind of go into that just really briefly here. See if they can race down to that price. You can take out the first leg. Just don't take out the second one. They made another move here, to kind of dove back, and I get that. And then you can take out the first one, just don't take out the second one. Here's the turnaround. You had 6 bars back down, but if you're not going to knock out this trend, clearly we're going to have to knock out this one, and that's kind of how it works. So yeah, you can wait until they get back up and start making that second leg again, And so you dove down. You can take out the first leg, just don't take out the second one. 9:30. It doesn't matter. 9:30 FOMC. If you want to see me trade the news, the FOMC, I'm gonna show you that on the channel. You'll just have to go to the channel and watch this. I don't want to put all these links below the video. The educational ones, I don't mind, but the other things to me is just entertainment. And so the FOMC, I traded live in that, and this one I traded live off the open. I guess those are the two like major things that had people like all over the place about the volatility, but it doesn't matter per se. I think the price patterns will probably be the only thing that sometimes can get a little tricky. But the leg removal, there's this, don't come past the second leg. They even did it here, dove it back down. You can break this leg. Now you got to switch it because you made another leg here. And so you can break this leg, just don't break that one. And then they pushed up again. Okay. Now, if you're not going to break the high, now you got to start looking at the possibility that there may be a trend, get ready to set itself. And so they came down, pushed up, came down. They still haven't broke that turn as of yet. They popped up again. Now this is where it gets tricky because they actually broke both of these legs. They broke this one, and that's bad. They didn't supposed to do that. Even though they hit the back of that and popped, that's bad. That didn't supposed to happen. And so they pulled up here. Now you definitely have that situation going on. And so from this side, that's all it is. From this side, you can come up and you can break this leg, just don't break that one, and let's go back down. So If you want to know the market structure, you can look at that video below as well. I know I again, I'm brushing over this information because the goal is to get you to watch the videos. I guess in total, if you just watch each and every last one of them, because everything that I release is supposed to be traded as a whole. So you're taking the content and kind of piecing it together, and then you're pulling the price patterns into focus once it gets near the price levels. Okay, so you have the range, you have the trend, that should essentially build the range and move away, and then once it hits the price levels, that's when you use the price patterns. And so I'm trying to, formulate some content that you can trade as a whole. If you're a beginner trader, it should help you out a great deal. All right. So didn't mean to bore you with that information, but I'll definitely have the links below if you're interested in, I guess furthering your understanding of what I'm putting out. If you're already an advanced trader, then share the video with someone that may benefit from it. If you don't mind, it's simple stuff. It may be a little bit beyond the scope of your skill level, but try to share the video because there's somebody out there that may need something just a little bit more dialed back, something that's a little simpler, and hopefully, whatever I say could, I guess, get them, where they can understand whatever it is that you may be sharing. All right. So I wish you all the best with your trading. If you like the content, if you don't mind, hit the video and hit the like, and I appreciate it. And if you want to, please subscribe. I'm trying to grow a community, so and I appreciate you guys all the time, all of the subscribers as well as the likes. I thank you all once again. Take care.